we could do a few things. I could have like one of you hop on here and I could answer questions to you, do a Q&A, walk through portfolios and like get some one-on-one coaching. Or I can build an algo from scratch, or we could go through the welcome guide that I kind of created that's still work in progress that is here. But let me know in the chat, put a 1 if you want to do like a one-on-one Q&A with me. Put a 2 if you want to just watch me build like an algo from scratch, or 3 in chat if you want to see the walkthrough of this guide here that I put together. And I've also got some resources for you guys. It's not complete yet, but we are building this out. This is a cheat sheet for ETFs. Basically, like if you don't know the U.S. bonds and equities and commodities and emerging markets sectors and the ETFs that are needed, we're basically building out this cheat sheet that allows you to kind of see like the major tickers, the shorts and the longs of all the different sectors and ETFs. So I will shoot this here as well.
So we got 3 votes for building an algo and 1 vote for going through the material.
Okay.
I'm very surprised another one. Nobody has questions that they want to ask.
Yeah, no, there's not a lot of Q&A.
Oh, hold on. We got one.
Fox does. And then also here's a so if you go through the welcome guide here, and by the way, the one that's built out the most is the day trading and swing trading one. So if these don't look complete, that's because they're not. So if you want to see like the most built out one, this one has a few more here. But inside here, I actually built a bunch of algos inside how algos work, and you can pick up all of those algos on this link right here, which is the welcome pack. There's like 6 or 7 different algos that you can pick up using that. And if you want to see them built, they're all built inside of these sections of the guide. Okay.
Now, keep in mind all of that information isn't necessarily educational information. Most of it is just marketing material that we're trying to use to get newer people in. But there might be something useful in there for you if you're very, very new.
For the guide? Well, the guide's mainly meant to teach people how algos work and how to build algos. It is promotional, but it's also, it's kind of a combination because, in order to promote algos, you have to educate people on how algos work.
Sure.
So it's the same thing.
It's a little of both, but it's very, very basic.
So physics, the only broker that they currently use is Alpaca.
No,
I think have they launched?
No.
Okay.
They use Apex now.
Did they completely?
No.
Did they completely drop?
If your account was created after October 10th, 2023, your account is linked to Apex. If it was before that, it's Alpaca.
Okay.
So yes, AGA Physics. If your account was created before October 10th.
Interesting. I wish they should just let people choose what brokerage they want.
What reviews about Apex? Because I've been using Apex on various brokerages for years and never had a problem.
So we don't work for Composer, so we can't give you definitive answers on like why they made these switches. But I'm assuming they went to Apex for the IRAs because Alpaca does not offer IRA accounts. So that's probably one of the major. Yeah. Well, they're going to have. I wonder. You're going to have different liquidity and fractional. You're going to have different fractionals probably on Apex.
Maybe.
I wonder how they're defining that on their ETFs and stuff.
Couldn't tell you. That's a question you have to email support@composer.trade for, because we don't have those answers.
Okay. Let's get started.
Garen, how did you discover Composer and why do you use it? Yes, I trust Apex. I have like 90% of my net worth is in Apex custody.
So I can't even remember how I found Composer. It was some random ad a year plus ago, back in like April of 2022. I just ran across it, and then I geeked out on it because I had 5 years of technical analysis experience, and just started building a ton of algos, and now we're here.
I discovered Composer because Brian E. posted something about beta ballers on Reddit, and I thought 10,000% AR is complete bullshit, and I need to go prove it. And then I did, and here we are.
Okay. All right. Let's talk about asset rotation theory real quick, because the strategy I'm going to build today is probably going to be an asset rotation theory. So if you don't know, there's a link inside of the guide, How Do Algos Work, Asset Rotation Theory, and Money Flow. There's basically three major asset classes in the world: commodities, equities, stocks, and bonds, and then they're influenced by interest rates and inflation. Different assets will essentially balloon or increase in money flow as macroeconomic things change, like interest rates and inflation. So the idea is how do we build algos that switch between major asset classes or sectors to capture the waves of movements? Now, to show that to you real quick on a chart. Also, while I'm thinking about this is an interesting chart that I started looking at. It's the S&P 500 divided by the M2 money supply. And it goes back to the 1960s, showing the ratio if you remove the M2 supply, or I guess weight the S&P 500 by M2. But
it's a ratio, right?
Yep. Yeah. So SPX real quick, we're going to go to the S&P 500 back to the 1800s. Going to go to a logarithmic chart. Then I'm going to throw on a thing called PPI-ACO, which is basically commodities, consumer price index of all commodities. And we're going to do a logarithmic chart there as well. And you can see that during periods of sideways movement, where the S&P 500 goes sideways through like the 1997s, commodities can have a huge bull run through that period. And same thing goes here during the World War II. Commodities have this huge bull run, and then through the 2000s, we have another big bull run in commodities. Now, these runs, the bull runs of equities can do. This is roughly a 60 to 70% annualized return year over year. The current bull run is somewhere around 35% annualized. The 1950s is somewhere around, I think it was like 40% annualized. And if we go over to commodities ran from $32 to $100, so a 3x increase over 10 years, what does that come out to? Let's do 70 divided by 30, 233 divided by 10. It's a 23% annualized over that period. So we're going to build an algo kind of around that theory. So let's hop into a new one. We're going to start with, I've kind of been wanting to build something with commodities or DBC. I'm going to start with DBC, but eventually we'll switch it to DBC or PDBC, which is a no K1 ETF, so we don't have to worry about the K1s. I'm going to get rid of my watch list. Try to get my chat up here so I can see what you guys are saying. All right. Go to the daily chart. And first thing I'm going to do is throw on 2 moving average indicator. This is a custom indicator I built to kind of show the long movements and the short movements. So DBC. First thing we're going to do is check the macro movements of DBC. Not 60, 600. And then we'll do a micro movement. So we're going to change, do 50. 50 is a bit too, 50 might be good. Try the 100. All right, so let's try the 600 and the 100 on DBC. Yeah. I haven't tried the percentage price oscillator signal yet.
That's because the general public doesn't have access to it yet.
True. I haven't experimented with it all, but it'd be interesting to see, to design some strategies with it. See, okay. Now we're just going to see when the 100-day is above, we're going to buy DBC. When we're below it, we're going to do SHI. Okay. It's not better than the S&P 500, but it's not supposed to be right now. It's okay. If we want to, I might be able to edit this and let's just do the S&P 500 and see how that turns out. Run it back to, how far back can I go with this? How far back does DBC go?
It's a great question.
Well, you can check on the chart. 2008. Let's do 2009. All right. So we've got some good movements here. 200-day, 100-day, S&P 500. Now let's isolate this a bit more. So we're going to do that 50 moving average that I was looking at. So now we're going to only capture when we're above the 50, and we'll rotate into something else when we're below the 50. And actually, I'm going to look at the standard deviation as well, just to see. However, I got standard deviation on here. I'm going to start with standard deviation just to see what's going on. See if I can do something with this. Greater than. Do standard deviation. Long standard deviation. DBC. A bit smoother. Seems to have a good stair-stepping effect. Let me switch this to just a fixed value of, I have no idea what the values are, but we'll see. Nope, that's terrible. Let's go back to standard deviation. Okay, so it looks like 20-day standard deviation, 0.5. Does anyone understand or not understand what standard deviation is, or what I'm doing with this logic? Okay, let's go back to the fixed value of standard deviation. So standard deviation is essentially a measurement of it's essentially throttle. Imagine if you select highest standard deviation, you're selecting the most aggressive asset. If you're selecting lowest standard deviation, you're selecting the least volatile or the least choppy asset. So what we're doing is measuring the short-term throttle versus the long-term throttle, and we're buying DBC when the short-term throttle is cranked up above the 100-day throttle. Hopefully that makes sense. Experiment with a shorter version, see what that does. That's worse. It's not bad. It's actually beating the S&P 500 through that period. But we're kind of flat through this period. So this logic is firing during this period. So let's do a rotate. I'm gonna throw
that's doing its job.
Yeah. Let's do a rotator inside here. So we're gonna do
Garen, look at the chat. We got the inevitable question where you and I are gonna start arguing 10 minutes into this call. So the dichotomy between him and me is that he puts lots of weight on the back test and I put almost zero.
No, not really. I try to not tweak it as much as possible so that I'm not overfitting.
Sure. But like, I would never build a symphony the way that you are currently doing it. I've never done this ever. I look at a chart, come up with an idea, and then implement it. If I have to go back to the symphony 2, 3, 4, 5, 6 times and tweak things and change it and check the back test, I just throw the idea out because my thinking was obviously wrong.
Yeah.
But see, it's very hard for me. Normal, it's very hard for me to make symphonies because there's just not that many interesting ideas out there. Like I don't like building symphonies. Okay, we can do that. If we want to look at one that I like, we can totally do that.
I'm going to throw a strategy in here.
In which part? Replacing Shy? Or replacing Shy or replacing Spy?
Just as inside the rotator. No, I'm going to keep it straight, standard. Oh, switch it to daily as well. I always forget to fucking do that.
Yes, you do.
That daily messed it up a bit. This actually might be a threshold strategy. Nope, that's worse. Did I break it? What'd I do? I didn't change the logic at all. How is this different?
Great question.
Way worse. Okay, I don't like the rotator.
Okay, so what's the goal of the else statement? When do you want this strategy going into Shy?
I swear that this changed. This was more oh, because it's not running back to 2009 for some reason. Why the fuck go back to 2009? There we go. Okay. Very underwater through there. All right. We haven't done any emerging markets either. Let's take a look at emerging markets. Super copy. Mm.
See, the dangerous thing that I'm not a huge fan of standard deviation when you're not using it to create extremely stable base groupings is that it's a movement in either direction. Standard deviation has no way of knowing whether the asset is spiking up or spiking down.
Yeah, that's why I've got the long switch.
Yeah.
That's why I've got the momentum switch here. And in fact, while you say that, I'm actually going to do this a little bit more, see if we can isolate this more. So I'm going to I'm nesting it into current price of DBC is greater than of the 50. So now we're isolating it. I've isolated it from the long momentum switch and the short momentum switch.
Mm-hmm.
So if we go back to DBC, this way we're only capturing the upward movements of that. We're only capturing the standard deviation when it's here and not under that. So let's see what that does. BSV, just to see when it fires there. That's worse. Okay. Interesting. All right. Let's go back to the original. Actually, might be able to improve this, actually. 20-day standard deviation returns. Now let's go back to the original logic. Okay. I'm going to do a bond check now. We'll start with TLT. Is there any bond logic that's just singular bonds, like TMB and TMF? Do you know of any?
What do you mean? Elaborate. That is single bonds, like measures 30 years to predict something, as opposed to like just BNB, just like the whole bond market.
Something that just trades bonds.
No, I don't, because everything that I've seen that has tried to do it has fallen apart since 2020. Because the correlation between stocks and bonds that existed from basically 1920 to 3 years ago doesn't do what it used to.
Proteus is saying AGG.
Aggregate Bond Index, yeah.
Is that a ticker or is that one of our symphonies?
Yeah. No, it's a ticker. AGG, I believe, is Vanguard aggregate bond. Might
Interesting.
be iShares. I don't remember.
What's the returns? 40% over the past years. That's actually a really good. That's actually a more stable version. I like that a little bit more. Well, I like the volatility of TLT though.
Yeah, it's because they're two different things. AGG is the entire bond market. TLT is the 30-year, specifically the 30-year.
Yeah. There we go. Now we're capturing. So we're rotating into bonds. It looks like there was a. I wonder if we can do a short rotator between. Let's try to build a short rotator on that AGG. So.
I mean, it's been done before. Hold on.
Yeah, I'm going to isolate this real quick.
Like, if you go into the database and look up, like, basically any symphony that Brian or Hinnom have made, they all have like BND and AGG checks. Like they just don't trade bonds off of those checks.
Okay. I'm going to try to build a bond checker, though, or a bond.
I made one. It just doesn't work over the last 3 years because, like I said, the correlation between bonds and everything else has fallen apart. And bonds have completely died over the last 3 years. They're down like 60%. But yeah, when I was making the cockroach, I made an entire like bond trend following sub-symphony for it. Like it's very simple. There's really nothing all that special about it. Like it doesn't. I don't think it's going to do what you want it to, but it did what I wanted it to.
We're going to do a standard deviation of AEG. Trying to think if there's any good books specifically on algo trading. I mean, there's Market Sense and Nonsense. That's a really good one. Jim Simmons, The Man Who Beat the Market, or The Man Who Solved the Market. That's a really good one.
Centennial Quant made a whole reading list. I gotta see if I can find that.
This isn't a bad one. It kind of captures the Okay, so now let's try to build a short rotator on this. So filter, if bonds are short, rotate. And then is it TMV that's short there? Yeah.
Yeah, the
Is there 2x or 1x shorts on bonds?
Yes. Bonds. Attributes.
I haven't filled that out yet.
So you want inverse, right? You want -1, -2.
Yep, help me out after. SDS. No, that's wait.
Just go back to the symphony, Garen. I'll give you a whole list of them.
TBT. TBF.
Garen, let me introduce you to a tool called ETFDB.
I've used it a lot.
It's got like the best screener for ETFs. All right, so you got TBF, which is the only one that actually meets our volume needs. TBT. PST is not high enough. TMV, and then triple T, TTT.
Correct, Flames. I am basically building. Yeah, I'm trying to build something that is profitable during when bonds are short, but it doesn't look like. I might just have to literally just do an SPY because theoretically, if bonds are down, SPY.
I mean, theoretically, sure, but you have to consider why bonds are down.
Yeah.
Because there's about a million different reasons that bonds go down, and then only half of those reasons make SPY go down too.
Let's do DBC and SPY rotator. We'll do a huge inflationary run is crazy.
So, what are we currently at? Are you beating SPY or no?
No, I'm
Ooh, 3-day max drawdown. Why would you do
try and max drawdown to basically capture in whichever one has the lowest drawdown. That's not bad. I kind of like that. Okay, so now we just need a section for DBC or the BSV. Let's see what this does. Not terrible. I think I can probably, I might be able to just remove this and reduce it. Not bad. It's not great. Is that the same as this one? No, is that? No, it's different.
Completely different.
Yeah. Oh, that's interesting because it's literally. Okay. Let's do a sector rotation. I'm going to add XLE into here.
It does not look like it has ever picked it up.
bad. So now we got energy exposure. So
thing.
when bonds are bearish, we can rotate between energy. Let's see what the emerging markets does in here too.
So specifically when 30-year bonds are bearish. Because the things that make different bonds bearish are different. So like something that makes the 2 and the 10-year go down is not the same thing that makes a 30-year go down. So like we're very specifically looking at macro policy not macro policy, but we're looking at like macroeconomics and very, very little bits of interest rate policy. Whereas if we were looking at like the 2-year is almost entirely dependent on what the Federal Reserve says that it's doing. So like that's something you just need to keep in mind when you're like looking at different bonds. It's not necessarily as simple as bonds go up and bonds go down. There's like 4 different major classes of bonds and 4 different reasons that they all go.
I'm going to try the create with AI real quick. Okay.
So we're at a 13.2 AR and a 22.2 max drawdown. I mean, that's not bad.
Oh, God. How many is it adding?
Jesus.
Let's see what happens. Okay.
Oh, it just added like all the different location ETFs.
Yeah. What in God's name is this? RSX. What is RSX? I've never even heard of that.
Great question.
I like how I made it purple and purple. Okay, let's change this.
Oh, RSX is Russia. It's the Van Eck Russia ETF.
Yeah, that's not going to fly.
That's not going to trade.
That's terrible.
I lost money when they listed that because I was shorting it.
I know. Did Brazil, Asia, Africa, Easy A? Let me see. I'm just going to cycle through some charts real quick. Australia, Korea, Taiwan. Taiwan's looking bearish a little bit. Oh. Still logarithmic. Japan's finally picking back up, kind of. Just so freaking volatile. Argentina had a crazy boom. ARGT. So this is kind of getting into the area of overfitting where I'm using past data. And all right, why is it not testing? They do. Broke it.
Nice job.
Yeah.
You guys feel free to ask any questions too while I'm doing this. That's driving me nuts. I don't want that to be purple.
That's better. You should be able to do it to 2007. DBC starts in like early 2006.
The selection. Okay, whatever. All right, let's just see what this does in here. So we're going to copy this and put it back into the bond check. Run it back. It's a bit better. Okay. Now, I do have. So I kind of want to add some leverage into the bull run part of the market through the past zero inflationary point. Should I build it off of volatility, or should I build it off of S&P 500 standard deviation, where we scale into leverage as standard deviation is lower, or I can do volatility is lower, or I could do what was that ticker that's on interest rates that tracks that kind of it's kind of a synthetic version of interest rates. We were looking at it in the last call. The hell was that?
Synthetic version of interest rates? Oh.
Yeah. It was it looked almost identical to interest rates. The hell was that?
I don't remember. Did somebody write it down?
I think it was an inflation. Does it not have TIPS? I think it was an inflation adjusted bonds. Yeah, it was an inflation adjusted bonds, but I can't remember what it was called.
So it was either TIPS or STIP or something like that.
No, it wasn't. It was a ticker I've never seen before. Mm. I should have saved that. It was in some kind of logic. I saw it in some strategy. Well, this strategy actually alone, the strategy is actually better than the original. What if I did this backwards? Let's try. All right. I'm going to share this with you guys. You guys can have this one. I'm going to fork it. It might have been TFLO. TFLO. Dyslexia. Yeah. I think it was it this?
That is such an interesting chart.
Yeah. That? No. Was it floating? Yeah, I think it was this chart. That's a weird RSI. But this was high interest rate environment, 2018 to 2020, right? And all right, so this is Fed fund rates in 2000. I can't go to daily. I mean, it kind of simulates it, or it kind of looks. Very, very similar, not completely. This huge spike up right here is very off. Fuck it, let's try it. Okay, so interest rate 0 is roughly 57 RSI. If strength index, what sign am I using here? 40 day RSI. 40-day RSI of TFLO greater than fixed value. Is it 0.57 now, or is it just 57?
I don't think anything's changed.
So SPY. not in SPY. We'll do. So. What's the oldest volatility? Is it UVXY?
It doesn't matter. They all had to reset in 2018, as far as I know. Volmageddon threw the entire volatility asset class into disarray. Everything had to either liquidate, be reorganized. Like, I don't think anything from before that still survives. So I don't think you can backtest volatility.
Okay, let's just do a standard deviation then.
I think you can do tickers like UVXY because it's the same ticker. It'll test before 2018. You just need to stop the test and start the test again before and after everything melted down. Also, since it is 2:53 and like you said you had an hour, let's call the testing good for now. Let's start at the top and explain why everything is set as it is. All the way up at the top of the symphony. And go through the whole logic and explain why the logic is what it is.
I'm going to do one more check. Is there any good black swan logics that are simple? I'd like to.
What is it? UVXY? 10-day RSI VIXI greater than like 75 or 80.
Okay.
And then just have it go into Bill.
What is it?
I have it set as 75 whenever I use it.
What day? What's 60 day?
10.
Oh, okay. Is greater than
fixed value
what?
75. Just Bill or shy or something.
Have you ever done a sort function?
No, and I really wouldn't want to, because when the market is melting down, I would rather just not be in it.
Sure.
Because if the market drops 30% and I don't drop at all, then I just beat the market by 30%. I don't really feel the need to try and catch some kind of falling knife to try and make it higher than that.
That dropped the max drawdown in half. I'm gonna up that a little bit though. Well, that increased it. Does anybody not understand VIXI volatility switches and black swan switches? Essentially, I'm checking when the market gets super hot, and then we're going defensive for a temporary position. Also, is there anybody in here from Wolf's live stream on Twitter or
the Spaces?
Raman's not in here, is he? No, he's not. from. I had a call with Pension Craft yesterday, and I invited him.
It's just you and me, buddy.
It's a bit better, but drawdown's way higher. Okay, we'll walk through the logic on this. All right.
Yep.
So the first thing we did was we built this off of a very long momentum switch of commodities, essentially measuring commodities to see if they're bullish or bearish. If we are bullish on commodities, then we check the standard deviation. We essentially check the short-term throttle and the long-term throttle of commodities, and we're buying commodities if they are bullish, if the short-term is a heavier throttle than the long-term. This right here could,
in either direction, up or down. So if the short term starts moving quickly in either direction, we're buying commodities.
Yes, but that's only on the bullish movement of the long-term trend.
Until the EMAs cross over.
Mm-hmm.
So you can be very high. You can have that 100-day over the 600, and then you have however far it is to fall before it switches off. So just keep that in mind for the future.
Yeah, you could tighten that up, but commodities also moves extremely slow. So
true.
There is a lot of room for improvement on this DBC. You could replace this DBC with
you could also just replace standard deviation with moving average of returns or price.
Yeah. So inside here, then we get into a bond check where we're doing the same thing. We're checking long-term bonds, and then we're doing a standard deviation of TLT, and then we are basically selecting the lowest drawdown between SPY and DBC. So we're rotating between whichever ones have the basically the max drawdown check selects whichever one is moving up the most or not, doesn't have a drawdown essentially. Then below, when DBC and commodities are bearish, we're going into a black swan check to check the volatility of the stock market. And then we are rotating, we're either taking a position in SPY or a 2x position of SSO based on the standard deviation of the S&P 500. So there's a ton of room that could, stuff that could probably improve this strategy. I'm not super sold on it, but I do have to get out of here. So I'm gonna. What should we call this? Somebody throw out some names. I'm gonna put it in the Discord, and you guys can mess with it and stuff if you want.
I got nothing. I'm not good at this part.
Can this thing create a name for me?
Good question. I like it. Commodity and bond rebalance strategy.
How do I stop it?
You don't. Aha.
The cyclical nature of commodities and bull run you have gone through, could there be a bull run section when commodities are not bullish sideways?
It's already in there. That's what the bottom part, it's going to default to the bottom part. So when the majority of the time that commodities are going to be sideways, it's going to be in the part that's labeled Black Swan Catcher. Like, you can argue whether or not it should be called Black Swan Catcher or just Bull Equities or something like that. But that is the purpose it's going to be serving.
Did we record this class by chance? Did you record it?
Yes, we did.
Okay.
I'm trying something new with the audio, so the audio might be a little funky on my end, because I've apparently never recorded a call in which I was able to be heard. But we should be able to hear me in the call now.
Okay.
So yeah, this is all recorded.
Okay. I'm going to throw this into the Symphony sharing. And when you get the video uploaded, send it to or post it in this.
Okay. Gotcha. Alright, so if you're heading out, then I am going to do the strategy that I actually like.
Okay.
It's very predictable because there are very few strategies that I actually like. Oh, can I not share my screen? Oh no, only one person can do it at a time. Stage.
Okay, I'll cancel mine.
Okay. Da 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 da. So, anybody who's been around for a while is going to recognize this because I made this like a couple months ago now, and I'm very particular about the things that I like. So, turns out my favorite symphony 6 months ago is still my favorite symphony. So, I'll give you guys a minute to read through it. But the very, very simple explanation of it is that we basically have two sections. We have risk on and we have risk off. Risk off is for when long-term bonds are going up faster than short-term bonds are. Bill is 0 to 2 year. Treasury notes, BND, is the overall bond market. So when the overall bond market is going up faster than something that stays flat is staying flat, it generally means that there are uncomfortable things going on with interest rates, whether it's because the Fed is hiking interest rates or because the market is just realizing that rates are actually going to stay higher for longer. Kind of like how we've had the most brutal 2 weeks in bonds in years very recently. We've got the 2-year yield is over 5% now, and the 10 years at like 4.99 something, levels that it hasn't been at since 2007, 2008. Situations like that, we want to be in some mixture of commodities and bonds. So both sections are just giant rotators based off the 1 month moving average of returns. We grab the top 2 out of these, grab the top 2 out of the commodities, and the top 3 out of the bonds. Now the reason it's 2 and 3, because the name of the portfolio is Pareto's portfolio. For those of you who aren't aware, I forget his first name, but Pareto was basically a polymath from Middle Ages, like 1600s. He was a polymath from Italy. Math, science, physics, all that fun stuff. He was one of the very, very smart people of the time. And he basically stated and determined that no matter what it is that you're looking at, any group that you're looking at, whether it's people, whether it's animals, whether it's things, soldiers on a battlefield, 20% of any given group is going to give you 80% of the results that that group achieves. And while it is not a perfect, hard, and fast rule, that logic has proven itself out over centuries to be very, very, very accurate. So I took it and I applied it to the stock market. I'm not the first person to do it. I'm just the first person that I know of in this community to do it. So we take the top 20%, 4, 6, 8, gives us 2. That's like 25%. Like I said, not precise. So we grab the top 2, grab the top 3 out of 6, 15. So we grab the top 3 out of 15 of the bonds, and we have a little bit of basically everything. We have the total, 2 different kinds of the total bond market: international bonds, short, medium, long, leveraged, not leveraged, short, long, everything. When the bond market moves, it picks it up. It doesn't do super well with choppy sideways markets because nothing in particular moves in any particular direction. But I'm of mixed feelings whether Composer is even the right platform to be trying to pick up single day movers on. So that's risk off, and then risk on is just the 3 major indexes. All right, bye, Garen. So risk on is just the 3 major indexes: the SPY, the NASDAQ, and the Dow Jones Industrial Average. We got the top 15 stocks in the index, sorted by their moving average of returns over the last month. Grab the top 3. It's the same thing for all of them. And then all the way up at the top, it's the black swan catcher that Garen put in at the very end. 10-day relative strength index of VIXI greater than 75% means go into Bill. And just to show you guys how often that happens, do I not have the log? I don't have the log chart. But, so the RSI so every time you see this spike over 75, it gets out of VIXI and it goes into Bill. And then if we lay the SPY over this on a new price scale, you'll kind of see that when it gets really high, we are immediately preceding a massive dump. Get really high, VIXI goes up, market goes down. VIXI goes up, market goes down. VIXI up, market down. And I'm sure you have probably seen people try and grab those changes. I am not at all confident in our ability to do that, and I find it much safer and much more reliable of a plan to just not play the game. Just don't play it. Like I said before, it's if the market drops 40% and you didn't move at all, you're now up 40% on the market. It really comes down to what your goals are. Is your goal total returns, or is your goal beating SPY? Mine is beating SPY. Technically, mine is beating the 60-40 portfolio. SPY is the second objective. Pros and cons of this strategy. It's very broad, it is not specific, and it does not respond to... It does not have any built-in way to specifically respond to sideways markets or anything like that. So something like what we've been dealing with over the past few weeks, months, arguably, you don't really have a good way to deal with it. But that said, year to date, year to date, we have a much higher max drawdown than SPY. But we also have a higher cumulative return because our inverse bond allocation has been doing wonders for us over the last few days, weeks. TBT? TMV, there we are. Yeah, that 16.7% of TMV has been doing some serious work. Some serious work. Because basically, all of that, I'll bet you, is TMV. But yeah. So this is kind of, like I was saying, this is basically the difference between how Garen and I build symphonies. I come up with a very, very, very simple theory, like when the bond market is going up but short-term bonds are staying flat, generally that means that things are not going to be going super great. So we're going to want to go defensive. And then it's just pick the thing that is going defensive. I stick to very long, very broad windows for my look back windows, because the shorter you make the windows, one, the less likely it is for the backtest on Composer to match live trading, if that's something that you care about, which you should. You should. If you don't, that's a problem. And I don't want to have to be checking these strategies every single day to make sure that they're working properly. Because the entire reason that I got into algorithmic investing in the first place was to not have to check my portfolio every day or every week. I want to be able to set it and forget it. And if I have like 2, 3, 4, 5 day checks in there, I need to be verifying that those checks are actually trading how they're supposed to. And I don't want to do that. But yeah. So that's basically the difference. I suppose to put it in very simple terms, in like plain English, Garen builds trading strategies. I build investment portfolios. Yes, Narwhal, I absolutely think that everything needs to be checked to see if it's performing as expected. So some of you have been around for a while. You know that like I got my start in trading in crypto, and one of the big things that everybody who isn't a scam artist in crypto preaches is that you need to verify things, don't just trust them, ever. And that goes for everything in your life. That's not just crypto advice, that is life advice. Verify everything, don't just trust it. You have to check it every day, unfortunately. Unless somebody has already done it. And then you trust that person. But the thing is, I don't. And I don't want to have to do a whole lot of work in verifying it, which is why I build the strategies like I build them. It's currently set to a 1% threshold, but I actually do have versions of this that I have set to weekly. I think. Pretty sure. Well, they must not have grabbed it then. Oh, Hino made it. Yeah, Hino made a weekly version of it. It's basically the exact same thing. He just changed the trend detection to cumulative return of treasury, inflation protected treasuries, rather than aggregate versus short-term bonds, which is perfectly fine check. Does basically the same thing, just in a different way. And he added one asset to each of the baskets. He added like gold, cash, and something. I forget what he added to bonds, but he added something to bonds. And then Yeah, Derek's right. Just run it live for at least a month, and then basically check the simplest way to do it is to run it live for a month, and at the end of the month, go compare the backtest chart from the day that you started it to the live return chart. And if you see any divergence at all, means that something is happening. Anytime you see them going in completely opposite directions, that means there's something not trading in line with how it's supposed to. Yes, very simple answer. When did you invest in it? Did you invest on the first day of the month? Well, there's your answer. So all of the... Yeah, that's exactly what it is then. The thing about monthly or weekly or threshold or any strategy other than daily, if you add money to it that isn't the day, if you add money to it on a day that isn't a day it would normally trade, you're going to throw all of the tracking off for it. Because when you add money to it, it forces it to recalculate the signals, and then it trades. Yep, exactly. So you had different assets from the day that you put money in to the first of this month. than it would have had on the backtest, I believe. Unless you started the backtest from the day that you put the funds in. I don't know. I've never compared it. All I know is that there is a big conversation about this in the thread for Commander BND. And this is like one of the inherent problems with monthly strategies, is that it's very hard to track them unless you do it perfectly. Anytime. Yeah, I mean, that is also a thing to look for. But that's more going to tell you whether or not that's going to tell you how badly you overfit it. I don't really agree with that. Like, if the backtest says that you're supposed to be up 11 and live running says you're up 18, yeah, sure, you're winning. But like, you then need to question what happened, because your strategy is not predicting the same thing that the backtest is predicting. And if you go off of the theory that everyone else does, that the backtest is supposed to be some kind of reliable source of information, which it's not, but everyone thinks that it is. If you subscribe to the idea that the backtest is supposed to be a reliable source of information, and your live trading is not matching the backtest, something is wrong. I can't say for certain what is wrong. I'm not going to do that, but something is not matching up somewhere. And out of the like 1,800 strategies that are in the database, out of the 18,000 strategies in the database, there's probably like 1,700 that like don't have an actual theory behind them. 1,700 of them are basically just, this looks really good on a backtest, so let's go. This has the assets that I want. The backtest looks acceptable. Let's go. Let's try it. And in situations like that, you need to be very, very attentive to what the backtest says, because if your live trading starts diverging from the backtest, that means that the entire plan that you built the strategy around isn't translating to reality. Now, whether that's because the plan just doesn't work, that's an answer. It could be that you're just very sensitive to the time that the strategy is traded. That's another answer. It doesn't mean the strategy doesn't work. It just means it might not be great on Composer. Well, sure, Derek, but that's one of the rare situations where somebody actually understands the logic of their strategy. FTLT was built with like actual thought and theory behind it. My whole point is that if you don't have actual thought, if you have thought and theory behind it, the chart is irrelevant. The chart doesn't matter. Like, now we're getting into my whole like argument about how they should just hide the backtester from people. Right. Yeah. No, like we are on the same page on this. Like we've talked about this enough. You and I are on the same page on this. If your strategy has actual data behind it that doesn't come from the composer backtest, fine. You can ignore the backtest. You should ignore the backtest. If the entire theory of your strategy is the composer backtest, you need to be comparing everything to that backtest. And if there is any mismatch at all, you need to throw your entire thesis out the window. If I was in that boat and a strategy that I was running that was based entirely off of the chart on the composer backtest started not matching it, I would immediately stop running it. Immediately. Same day, liquidate it, shut it down, figure out why. Now, this is all just a very long, very elaborate way of saying that before you run a strategy, you need to figure out why it does what it does. I mean, I agree. But even then, Quantstats data, like, that's still like step 2 to me. Step 1 is figuring out, like, why. Like, why are we, like, in that strategy that Garen just made? Because some of it does have actual data to support it. So when the 100-day moving average of the price of TLT is greater than the 400-day moving average of the price. So when 30-year bonds are elevated, that generally means that, well, let's pull it up. What does that generally mean? Because, like, I don't personally know of anything that signals other than long-term bonds are going up. And when long-term bonds are going up, that usually means that the yield curve is uninverting. Doesn't it? Okay, so we have to go to before 2020, because after 2020, everything changed. Inverse, positive, 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 neutral, positive correlation. Interesting. Yeah. I don't know. So, in a situation like this, the first question that I would want to answer is, what does this signal? What does it signal? I am by no means a market expert, so I'm not going to pretend to know exactly what that signals. I have some theories, but I'm not positive, so I'm not going to try. I don't really know if there's a correlation between all of these things. And that's basically what it comes down to. I wouldn't run it because we get to the first logic check, and I don't know why the first logic check is supposed to work. I just wouldn't run it. Unless Garen can explain to me why it's supposed to work. Which is what I try to get him to do, but... busy man. But it's all about your personal risk tolerance and how you think the process of building a strategy should work. Because there is no consensus. It's not like he's wrong and I'm right, or I'm wrong and he's right. There is merit to both sides. Yeah, there's merit to both sides. So with that, you guys have any other questions? Oh boy, Derek has questions. I am not giving you that information, sir. No, you're not. You're not kidding. You want my social security number. See, I knew I had an FBI agent. I just didn't think it would be Derek. Yeah, the Fed in your friend group is always the one that you least expect. But, alright. So, if nobody else has any other questions... Oh, wait. Okay, waiting. Proteus is right. They do already know my social security number. Oh, God. I mostly agree with this so far, yes. A lot of the recent downturn can be linked to yields going up more specifically, which does cause bonds to go down. Best way to track that momentum. Well, that is a very, very good question. So here's what we're going to do. I'm going to pull up, not bond check, not 1.1. I'm going to pull up my regular one. 60-day cumulative return bond bill. We're going to get rid of SPY. So far, every strategy is all down. Is it really? Over what time frame? So when did the bond market start dying? It was like beginning of August, right? Roughly? Ish? It doesn't really... That doesn't really look like it's down to me, personally. But I didn't make any of those, Narwhal. Rogan took, like, a group of strategies that, like, I somewhat understand. Oh, sorry. Rogan took, like, a group of strategies that I somewhat understand and just started doing ungodly things with them. But yeah, so there's a couple different comparisons that you can make to try and get a sense of what the bond market is doing, because like I said while Garen was talking, different parts of the bond market signal different things. Some are more responsive to government policy. Some are more responsive to macroeconomics. Some of them are almost entirely dependent on just the predictions of bond traders, like where they think the interest rates are going to be over the course of the next 30 years. I love how you still have 33% in Shiv. I like that. I don't know, man. Basically, any strategy that I've seen that has been like that even has had the ability to be inverse bonds has been up. So something like this, where you're basically comparing like very, very short-term bonds to the total bond market. If the short-term bonds are flat or up, and the long-term bonds are down or less flat than the short-term ones, adjusted. Okay. That basically means that the bond market is going down, and if the bond market is going down, well, you should probably have the ability to short bonds. I don't think there is really a best way to track it, because there's multiple ways to track it that are all going to be different levels of sensitive to different things. It's okay, Derek. We knew what you meant. Even the version that Hinnom made. Even the version that Hinnom made that uses the 60-day cumulative return of tip. And then we get rid of bill, tip. So 60-day cumulative return. Interesting. I could have sworn there was a pre-made thing for that. But anyway, if you just look at the trend over the last 60 days. No, stop it. So if you just look at the trend over the last 60 bars, it's clearly down. So having something in your rotator that gives you the ability to short bonds, very good idea, very safe idea. Bye, Derek. Have fun with the pumpkins. So one of the things me and Garen are actually doing is trying to put together a list of everything that we can think of and what it signals. And I haven't even started the task yet because it's ridiculously long. But yeah, like Derek showed, comparing the 10-year to the 2-year, that works. The only problem is I don't think there is a direct 10-year ETF that we can use in Composer. Nope. TVC. No, that's yield. Never mind. But yeah, there's a lot of different ways to do it. Like you can literally just do like some kind of moving average of cumulative returns or moving average returns greater or less than 0, and that'll tell you whether it's trending up or trending down. That's probably the simplest way to do it, which is exactly what Hinnom did. But like this, I mean, this caught the current downturn in bonds. This is up July. It's up about 14-15% since July. And if we want to shorten it to just the time that it's been out of sample, it's up 3. My version's up 1.5. and SPY is down 1.15. So my question for you is actually, what strategies are you running where all of the strategies that you are running have failed to catch anything going up in the last few weeks? That would be my question for you. Because there's lots of ways we could have caught this. It's just a matter of how they're nested inside of other things. That's a very broad statement. There's like 1,800 strategies in the database. That doesn't narrow it down at all. I appreciate the faith that you've put in us, but that doesn't help me figure out what's going on. Like, in order for me to offer like any advice, I need to see the actual strategy or strategies. Sounds good to me. You take your time. Time is it? 4 o'clock? Damn, we've been at this for 2 hours already. All right, give me like 2 minutes. I need caffeine while you pull that up. Just grab the link and throw it in chat, and I will be right back momentarily. Okay, let's see what we got. I mean, you can still place bets on what I'm going to say before. Oh, okay. Okay. So my question for you is what what has proven that these strategies work? Because right off the top, I can say pretty definitively that there's 2 out of this list that, in my opinion, don't. Just straight up don't work, actually. Got it. Okay. Did you do any investigation into the logic of the strategies to see how they work? What? I want to see what is the out of sample date on this? When was this built? Oh. Oh, it just got built today. Okay, there is no out of sample date on it. Yes, but just because we've built it doesn't mean that it's good. Like I've said, I'm very open about the fact that out of the 1,800 strategies in the database, there's probably 1,750 that are just garbage that shouldn't even be looked at. And the SSO chips and commodities one is actually one of those. I've held that up as an example of how not to build a strategy. Like, in my opinion, the best thing about this strategy is the Black Swan Catcher. The best thing about this strategy in particular is the Black Swan Catcher. Beyond that, it is really good at picking the top performer in semiconductor bull markets. If we are not in a semiconductor bull market, I don't personally think this strategy works. Because I am not convinced that there is a clear correlation between any of these assets. You can make a pretty decent argument that there's a correlation between like energy, commodities, and like SPY, and then you can like make a second order comparison that SOX, NVIDIA, and AMD make up really large portions of the S&P, so there's going to be a decent amount of correlation there. But I still wouldn't make that argument, personally. I actually wrote a newsletter about this strategy. I wrote a whole newsletter about like this style of strategy because it's a really, really good idea. It's a really good idea. I just have issues with the things that they put in this basket specifically. I don't like that it's top 1. No, I get it. It's fine. Like this none. Okay, I apologize if this sounds like I am. I apologize if this sounds like I'm being aggressive towards you. Not my intention. It's just the strategy. Yeah, it would actually be very helpful to talk about that at some point, Brodius. I slipped like a very little bit about that into like one of the more recent newsletters, but it was a very little bit because like I don't really have that much of an opinion on it. Mean reversion comparison to Python code. And then beta ballers. Beta ballers just doesn't work. Like there's really not a whole lot of deeper discussion to be had. Beta ballers just doesn't work. Like it doesn't really matter what the cumulative return says that it is, because the signal on it is so sensitive and the live trading is so uncorrelated to the backtest that it doesn't matter what the backtest says that the cumulative return is. It is not reflective of reality. Which basically means that putting beta ballers into a rotator like this that, by my understanding, has to work off of the backtest data throws the entire thing off. So there's 1, 2, 3, 4 T triple Q for the long terms, but they're all slightly different. So I don't actually use Composer because I don't have money to put in a non-taxable brokerage account. Or I don't have money to put in a taxable brokerage account. Everything that I can afford to invest goes into an IRA. Once Composer has IRAs, that'll probably change, but I don't use anything right now. But yes, if I was to put anything into Composer, it would probably just be Pareto's portfolio. That's actually not true. I would do like probably 90% of the money into something like Pareto's, and then I would take the last like 5 or 10% and then find like 100 of these ridiculous strategies that people think work, and then just see if they do. Like honestly, the 4 T triple Qs, they're probably fine. I don't know anything about the specific versions that you have in here. I don't really know anything about the specific versions, and honestly, most of them are too long for me to really wrap my head around properly. So looks the same. I just don't know how to share it. Okay. But yeah, so the 4 T triple Qs are probably fine. In a basket of 8, I don't know if I would have half of the things in it be T triple Q. That's a little heavy on one strategy for me. Oh, I know what that is. I like that. That's fine. I don't know what that is. I know what that is. That's very simple. Let's keep that. 4.11 shouldn't be that different. So let's go to the watch list. Yeah, the backtest versus live trading thing is another one of the reasons that I basically tell everybody to not treat Composer like it's a trading platform. Just don't. Because if you're building a strategy that is sensitive enough to have those last 10 minutes matter, it's not going to end well. It's not going to end well. That's why I don't really recommend look back windows that are shorter than like 2 weeks, like 10 days. Yes. Yeah, that's actually a very good point. One of the most useful things about the backtest is seeing what the minimum amount of money you need to put into it to test it is. Okay, so here's what we're going to do. We're going to take that. Paste that in. We're going to get rid of that. We're going to get rid of that. Paste that in. Oh, threshold 10%. I also would not set it to threshold 10% because you have multiple strategies in here that are set to trade daily. And if you have strategies that are set to trade daily, then the strategy needs to trade daily. This is the one you built. Do I think it will work? Beta gets depression inflation strategy 30. Well, if the goal was steady growth without wild swings, I don't know if we have achieved the no wild swings. A standard deviation of 41.4 is kind of a lot. What is this? What does it catch from December 20th? Fuck, not editing. What does it catch from December 20th, 2022? Oh, it goes 100% into FNV and then into SJB, USDU, and BTAL. What is SJB? Where's Composer's database? SJB. SJB. Short high yield. So it's like the inverse of bill? Inverse of bill, inverse of box. Okay. Interesting. Okay. I didn't even know that was a thing. So then from there until about February, it just goes on an absolute heater. Soxal and Fang, and then mostly into Cash and IAU. IAU. BlackRock Institutional Trust Company. iShares Gold. Okay, okay. Something I noticed, market is down, they're going up. Maybe there is some kind of short-term signal there that I don't know about. That's definitely possible. But what does concern me is that you have 33% of the portfolio in that asset class that basically just permanently decays from August 1st almost straight through till today. Now, I recognize that we are still going up, but what's the volume like on these tickers, actually? That's... Oh, wow, 200 million. Okay, that's perfectly fine. FNV. Donahue Fort Lines Risk Management Innovation ETF. Ooh, okay, that's going to be a problem. Okay, so the first thing that you need to do before you go and run this live, the first thing that you need to go through and do is verify that all of the tickers that you have are above $1 million USD a day in average volume. Because if a situation ever comes up where a composer tries to trade into FNV, your entire symphony is going to fail for the day. Now, I don't know how likely that is to happen. But the first thing that I would do is go through and make sure there's adequate volume on all of the tickers. But beyond that, bet against depression inflation strategy, bond yield risk off, TTT. Zero to 5 year high risk corporate bonds. So when high risk corporate bonds are weaker than inverse 30 year. So when 0 to 5 year distressed corporate bonds, high yield corporate bonds, are stronger than the 30 year. Okay, my first question is whether or not that is actually a signal, because once I piece that together in my head, because Triple T is an inverse 30 year and Shy G is 0 to 5 year high yield, which also means high risk corporate bond ETFs, which means struggling companies. So when the bond market is going down, but distressed companies are going down slower? Yeah. Bond yield risk off. Huh. Okay, all right. Yeah, I can intuitively see how that would work. So let's see what happens. I want to see what this does on its own. So that catches almost all of COVID. That's impressive. 3/12/2020. And then it sits in bill. Interesting. I don't know. There's something here. It's doing something. So it's always interesting when you see a basket like this and you switch it from 3 to 4 and it completely changes the entire performance profile of the entire strategy. Like, I've never been entirely positive about what to take from that, but my initial read on situations like that is that there's just a lot of different things in the basket that are somewhere on a spectrum of correlation to whatever the signal is that it is you're detecting. Actually, no, I want to see. SJB, USDU, ERX, and BTOL. ERX. Yeah, it seems like when you throw the filtering off for COVID by even the slightest little bit, that 60% actually just goes into a fall with the market situation. So, mixed feelings about how well that would actually work in practice. But I do like how it looks like when the market starts going extremely volatile or down, the strategy appears to stay mostly flat or even go up a little bit, which I do like. You can actually just put SPY in there and oh, wow, that changes like nothing. Interesting. There we go. Okay. See you, Narwhal. Have a good night. Yeah, I don't actually hate this. I need to look into this signal more, but I don't. I don't hate it. I don't hate it. Okay, so if so we've established that this part does well when the market is flat or down. The market is flat or down. And it's mostly because it has the ability to rotate into like equity bear ETFs, market neutral, cash. The one time that I saw it go into ERX, it went down. So I don't know. I have to figure out what the signal actually signals. How you learn? Oh, I appreciate that. I appreciate that. Like, I don't really look at myself as like an expert in this by any means. Despite the fact that I'm the one sitting here talking right now, I don't really think I know that much more about the market than the average person. So anytime I go into an interaction about the market, I try and look at it like I have something to learn from basically everyone that I talk to. So just because you're sitting here asking me questions about it doesn't mean that, like, in order to actually judge anything properly, I need to go into it with the expectation that the way that I think about things could potentially be wrong. You can learn something from anyone if you keep your mind open to the idea. So I appreciate it. So, okay. Bond market up. When the market is flat to neutral. If the market is not flat to neutral, okay. Huh. Well, that didn't do nearly what I thought it would. Okay. All right. 60-day cumulative return of bond does something. $60-day cumulative return of bond is less than -1%. So if it's down like 1.1, is there any other way for this to buy shy? I want to see when does this actually buy shy? Oh, it actually buys shy kind of a lot. Interesting. Nine 13, 2023. Yeah, it's in that slow, steady grind up. Come on. But the market wasn't doing anything. It barely moved. Why would we want to get out of the market? July 21st to the 31st. The market was flat. End of June, the market was flat. Okay, so it grabbed Soxel, rode Soxel, rode Soxel up, rode Soxel back down. Ouch. That hurts. It's gonna happen, but not fun to look at. I'm not sure this is really getting you anything. Like, it knocks the standard deviation up like a point or two, and that all changes, but like, logically speaking, if we're going into an else statement from the market is flat, if the market is not flat or slightly down, and bonds are not down over 1%, or sorry, the bonds are down more than 1%, go into shy. I kind of feel like we'd actually be better off just going into that basket. And then, just for good measure, we bump that up ever so slightly. that change anything? Oh wow, yeah, it did. I'll just leave it like that. Because like that's just another way of saying that you don't want to be in bonds, which is fine. You can layer multiple checks that check more or less the same thing. That's perfectly fine. That's a very good way to make sure that you're actually doing something that you want to do. You just have to make sure that you don't tune those checks too tightly to the point where you're overfitting. But you have reasonably diverse baskets. I mean, they're all short the market, which, given the checks that they're under, is perfectly fine. Is more or less exactly what we want. Yeah, I'm going to put that there. And we're going to move on to the risk on. Okay. So markets, risk on, bet against the market. Rising interest rate ruler. I mean, this is kind of betting on the market. This part is kind of betting on the market. But I see what we're going for. Current price is greater than the 200-day moving average. Yep, classic bull bear check. If the 10-day RSI of TQQQ is greater than 79, UVXY. That is a thing you can do. Personally, I don't like trying to do that, at least not with something that's going to be an overwhelming part of my portfolio. Yeah, you did copy it from us. And I'm of two different opinions on it. If you want to have something that's a fairly small part of your portfolio that does very risky things like that, go for it. Be my guest. I'm probably going to do that too. But when it comes to the things that are going to make up the majority of my portfolio, I'm not doing that. That is too much risk for me to be slinging 70% of my net worth into that. That's not going to happen. That, I will put 70% of my net worth into that. 10-day RSI of 10-day RSI of TQQQ being over 80 going into Bill seems pretty safe to me. I'll take that bet. I will not put that into UVXY, personally. But if we are not spiking, and the 50-day max drawdown of SPY is greater than 8%. Okay, so I don't like max drawdown checks because I have not figured out how to properly use them. So we are going to switch that to 50 days is 10 trading weeks. 10 trading weeks is like 4, 8, 12 is like 2.5 months. That's almost a quarter. 30, 60, 90, 20, 40, 80. It'd be 80 for a quarter, I think. Yeah. Less than -5. $17 is very specific, so we're going to round that out to 3 weeks. And we're going to pick the most volatile thing. We're deleting that because that's not going to trade. Inflation expectation, bonds, and gold. Okay. So we're going to take this whole part. New symphony. Save changes. I want to see what this does on its own. More like in-day indication may cause problem in my thought. Yeah, that's a fair point. Like intraday movements. No, I get it. That's fair. I can't really argue with that. I think it's just personal preference. What is the one issue? No. Paste. That's a heck of a drawdown. April 4th, 2022 till December. Wow, so it spent most of 2022 in a drawdown. That's wild. But that does not necessarily matter because this isn't the main part of the symphony. '22. See, this did not spend 2022 in a drawdown. So that hopefully explains that. It should. It does spend 2022 very flat, though. Very flat. Okay, so SPY is crashing more than 5% for a quarter. I'm going to say 5% for a month. Because, like, I don't know. It just seems way too long. I guess all of it is based off of bonds, so it makes sense for day standard deviations of returns. We want the... Haha! There we are. Thank you, Proteus. Surprisingly little. Surprisingly little. Weird. Did I do that for this too? No, that's daily. Oh, this is also 10%. Let's... Okay. Interesting. Okay, 15-day standard deviations of returns. We are picking the most volatile one. I don't want to pick the most volatile one because that picks the most volatile one both directions. Now, there's two ways we can look at it. We can either take the 5% down on a month check to mean that we want to get out of the market, or we can try and grab something that will go up. I am going to say that personally, I would rather just get out. I'd rather just get out. I don't want to be in the market at that point. So we're going to do that. We're going to add Bill. We're going to add PDBC, no K1 ETF for commodities, things that are roughly not correlated. I'm going to bet you that this particular basket has never been traded into. Oh no, it has. Okay. It's just not very often because it barely affects the stats. I just want more options for things that it'll grab in this situation. Okay, so if SPY is bullish, we are not completely spiked, and we haven't gone down 5% in a month. But the 10-day max drawdown of triple Q is greater than 5.5. See you, Taylor. The 10-day max drawdown of T triple Q is greater than 5.5. We're going to swap max drawdown to cumulative return. 10-day cumulative return is less than negative 5.5. Nope, I broke it. making it worse. 20-day max drawdown. Oh, I've completely ruined it. 10-day max drawdown greater than 5.5%. This is why I don't try and do things from memory. There we go. Okay. I don't know. I guess let's leave it. I still don't... Well, I guess it's only 10 days, so it's not that huge of a deal. If Triple Q has tanked more than 5.5% at all in the last 10 days, from peak to trough, you want to get out. Yeah, it makes sense to me. I can't argue with that. And then if the 10-day max drawdown of TLT Let's just assume that it works. I'm not even going to touch it. Like, I don't necessarily know if this actually makes I don't know if it really makes any... I can't wrap my head around it. Like, I don't know why it's in here. Like I said, I'm far from the definitive source of truth on these things, but like I don't know. I don't know what I'm doing with this piece. So let's just leave it. But it's not in day though. It's if anything has happened in the last 10 days that has made TLT go down more than 3% from peak to trough, this triggers. And like that might just be me not liking max drawdown as a trigger. It might just be that. But like and then we get to risk on. And that is a risk on basket. I want to see what happens when we make it top 3. Max drawdown goes down. AR stays roughly the same, but drawdown goes down. Oh, so you know what that means? When you go from 2 to 3, and your max drawdown goes from 62.8 to 55, and your AR stays at 66.2. Basically what that means is that one of the two things that you grabbed at some point was a illustration of exactly what I mean and exactly why I don't really like selecting the top standard deviation in a bull section, or the top standard deviation at all, actually, but especially for bull sections. One of those two is going up and the other one's going down. And then once you introduce the third, it's another one that's going up. So it cancels out some of the drawdown, like a little bit of the drawdown. So I'm going to leave that at 3. And we're going to go $35-day cumulative return, 66.2, 55.1. Yeah. I'm going to take that. Okay, so that's that. Now we move on to the else. So the else is the bear side, basically. 55-day max drawdown of SPY is greater than 8. Now's the fun part, because we can... I should have made that bottom too. Yeah. We're going to paste that there. Day max drawdown of 2 triple Q, more than 5. Yeah, that's fine. That's also fine. Roll with it. Select. Do we really want to risk on? Interesting. Cumulative return. 10-day cumulative return. Top 3. Run. Okay. Cool. So that's basically that. So we're going to put that there. Ta-da! That tiny backtrack. What do you looking forward to improve? in a situation like this where I'm not necessarily working in a situation like this where I'm trying to work from a pre-existing strategy backwards to making the pre-existing strategy better, yes, that is exactly what I would do. But as you can see, I did a lot of things in there and kept a lot of things in there that made the backtest stats worse, purely because on a theoretical basis, it is better to do it that way. In a very broad sense. Because if I know if I say definitive things like that too strongly, Proteus is going to get mad at me. So, like the risk off basket. Like I selected the bottom two, shortened the standard deviation period, and added two more slightly uncorrelated things to the basket. It made the stats worse. Like it did. Like I'm pretty sure the stats would be better if we took the version that you originally made and pasted it over it. However, going forward, I think that there is a better chance that this basket is going to more robustly do the job of a risk-off, equity market neutral basket. That makes sense? Okay. Like, I know it doesn't necessarily perform it. Oh, yeah, of course. Is there anything else I want to change about this? No. Nope. Risk on basket's basically perfect. It is all of the high beta leveraged assets. Oop, nope. Copy public link. There you go. Now, what I want no. Where's the original? Now what I want to do, watch, copy the drafts. Well, I certainly changed things. That is for sure. So there's a massive difference in the backtest between our two strategies. Huge. Three-year. Mine's at 500. Yours is at 1250. Yeah. I don't know. Over the last 3 years, the original version has almost tripled mine. Turn off copy one. So turn off yours. So, I mean, let's look from November 12th, 2021 till November 2022. SPY was down 10. You were up 30. Not terrible. So all of 2023, SPY is at about 15%, and if this strategy works as well as the back test says that it will, 115. It's a pretty solid beat. Even just September. 10% in a month and a half. It's not all up though. There are some periods where it's like 15-20% down. Some pretty rough top to bottom drawdown months too, so bottoms out at 11.67. Not the worst, but not the greatest. Over 20%, 20. But yeah, I mean, this is a really good example of even with the most conservative strategies, sometimes you're going to just not beat SPY. Sometimes you're just not going to. And it's a really, really good example of why if you are confident in the theory of your strategy, just let it ride. That said, before I give this any kind of like stamp of approval or anything, I need to like dig further into the triggers. Because, like, the one up at the very top is not something that I've ever seen before. Short-term corporate junk bonds versus inverse 30-year. That's not a signal that I've ever seen before. So I need to dig into that before I say, yeah, that's a thing. That works. Oh, that's actually a good point. Let's run this through that. Wow, that Serenity Index is much lower than I thought it would be. But then again, I suppose this is a fairly volatile strategy, all things considered. Proteus, what stats do you normally look for on this? I know you look for like Sortino squared, smart Sortino squared, or square root. Well, we do not have that. Yeah, no. Yeah, if the name of the symphony is the goal, steady growth without wild swings, I cannot in good conscience say that goal was achieved. The backtest says it goes up and to the right, and it's slightly less volatile than SPY. But no, Composer does not hook into MetaTrader 4 or MetaTrader anything. Composer only uses you can only trade stocks and ETFs on Composer. Well, the Serenity Ulcer is not really anything special. Right, okay. Now I have to wait for it to load because Proteus pushes the limits of everything. Proteus, I have no issues running anything on Composer until you start sending me links. Why do you want to break my browser, sir? Why do you do this to me? Generate report. So just to illustrate what he's talking about in terms of like a stable rolling Sharp and rolling Sortino, this is more or less what he's going for. This is unbelievably smooth. It's the one that you have. The stats seem reasonable enough to me that it could work in live trading over a reasonable long period of time. The compound annual growth rate isn't ridiculous. You don't have like an extremely elevated and yet extremely stable level of volatility. You suffer drawdowns just like anyone else does. But like, this is just so perfect. The monotonic microblob is so good. It's so good that I struggle to believe that it's real. I want it to be. Don't get me wrong, I want this to work exactly how it says that it does. See, that is the most promising part about this to me. The fact that it's worked for 3 weeks straight and it's matched the backtest perfectly, that's the most promising part about this to me. But yeah. 30-day RSI. Oh, you guys can't see my trading view window. Stop streaming. Screen 1. Go live. Okay, there we are. Now you can see my trading view. So $30-day RSI length. 30-day source close type SMA length. Yeah. Okay. How do I compare two RSIs? No. Okay. It's not perfect. But it is telling us something. Yeah, try it. See how it goes. I mean, it's the only way to really know anything for certain. I wonder. If we just shorten that, what happens? Because it looks like that correlation is really only a short-term correlation. No, it's not perfect. It's not bad. I don't know. I feel like we could probably replace this with like cumulative returns of tip greater than fixed value of 0. And let's see what happens. That is actually just a useless signal for those. Okay. Cumulative return of bill. 20-day cumulative return of bill is greater than 20-day cumulative return of, let's do ag. Ag, BND, same thing. Okay, that's a little better. Drawdown's still there, but it's at least picking up roughly the same signal as something that I already know is reasonably accurate. $30. Yeah. It's actually good work. It's compelling. It is worth watching. I'm not gonna give it like a go put money into this in any serious way outside of testing it, but yeah, definitely try it out for like a couple months and see what happens, because I'm very curious. But at the same time, keep in mind that there are definitely months where it goes through some pretty serious drawdowns. So there is a chance that you put money into this and it just starts going down 25% over the course of the next month. Just something to keep in mind. Doesn't mean it's not working. Doesn't mean it's broken. Yeah. Actually, let's... $80.9. $80.4. $83.5. $86.9. $87.5. $87.9. $87.9. You should be okay with like 50 to 75. There are definitely some situations where it's really not ideal. Because there was one in here where it put you 10% into just cash because something's non-fractionable. But I don't know. It's annoying for tracking purposes. I don't think it's necessarily the worst thing in the world for not losing money. But yeah, give it a shot. Let me know how it goes. I'm curious to see. I want to see both versions too. I want to see the version that you made and the version that we came up with together. Because I'm not really convinced one is better than the other necessarily. It's just if you force me to give a confidence rating, I'd probably be slightly more confident in the one that I made just because I'm anal retentive like that. That's fair enough. I can respect that. I can respect that. But yeah, alright, so now that we're going on 3.5 hours. What is it, Proteus? One last question. What you got for me? Question, statement, whichever. That's a good point. If you can figure out exactly what the non-fractionable asset is. I'm going to bet you money that one of them is RINF because every time I see something in this, or every time I see something in there, that's higher. So I'm going to bet one of them is RINF. Oh yeah, that's absolutely an imposter. That is 100% an imposter. Can you screenshot the guy's profile? And if he's in here, I'll ban him. Yeah, I've never really looked into what is fractionable and what's not on Apex. It's just never really been a thing that I've needed to care about. Anytime, Tin. Have a good night, man. Oh, it's this guy. If you go over to mutual servers, does it list this server as a mutual server? It's like Garen. Yeah, unfortunately, if he's not in the I can't really do anything because he's not in the server. But you are not the first person that's had this person DM you. So the guy's got like an alt in here or something. But at least he's smart enough to not DM me. I guess. Small benefits. Oh boy. Okay. But what you actually can do about situations like that is if you go to your user settings, assuming you're on desktop, because I'm going to walk you through exactly what I'm looking at. If you're on mobile, it's probably going to be similar, but not exactly the same. So if you go to user settings, it should be down on the bottom left. It's a little cogwheel. I believe it's in privacy and safety. And there's a couple different options you have. There's like the DM spam filter. But the checkbox that I normally leave checked is I only allow direct messages from people that I share a server with. And even though this is like loosely a business account of some kind for me, because I help run a community, I don't want to deal with it. I don't want to deal with spammers that are not in this server. So if you, I don't think Discord has this turned on by default because they just want everybody to be able to reach out to everyone for some reason. I would strongly recommend only allowing people that you share servers with to DM you, though, personally. Oh, yes, that's incredibly fishy. So, Composer is your brokerage account. So there's no need for anyone to attempt to get into a brokerage account. Like if anyone just ever brings up your brokerage account information, they're trying to scam you. They're just trying to scam you. Like there's some corner cases with like custom tools and custom solutions that people are building in the community that don't involve Composer. But if you're ever going to get access to that, you're already going to be in direct contact with that person anyway. So no strangers are going to be asking you for your information. Most of these symphonies are getting excessively complicated. So the now that we're up to like 1,800 symphonies in the community database. Yeah, 1,837 rows in this. So like 1,800 strategies. Now that there's 1,800 strategies in there, there's probably 1,750 that are just not even worth considering. The hard part's filtering them out. But you are absolutely correct that there are some that are just too complicated. As far as live trading, personally, I'm waiting for Composer to release IRAs before I start trading any of this stuff live. I've been waiting for that for about a year now. I'm basically just here because, like you said, I like the community, and there's a lot of smart people here. Security, impersonation, and legality section. Not a bad idea. Not a bad idea at all. In the wiki that me and Garen are building, where is it? In the wiki that me and Garen are building. Alright, we haven't pushed it live yet. It's still in Notion. So, we got a whole security section. Most of it is much more generally focused on account security than Discord specifically, but I think that this is a good idea. I'm going to add that to my to-do list. See, they can just copy that, though. Like a blue checkmark kind of seal thing. Yeah, that too, Brodius. Like, not even... like, the two members of Composer staff that do actually look at the server, none of them are actually going to help you with anything to do with Composer in Discord. They're going to tell you the same thing I do. They're going to tell you to email support@composer.com exactly for this reason. Like the very short solution to this problem is just if anyone asks you for any kind of information, period, don't give it to them. And like if I ever have to DM you for something, I will either ask you to DM me first or tell you publicly that I'm going to DM you. That's weird. But yeah, so here's a little sneak peek of the wiki that we're building. But if you guys are all good, I am going to go hop off and take my dog outside because I've been sitting here for like 4 hours and my back hurts now. Anytime. I mean, like, I enjoy talking to you guys. So, this was fun. I just have to take my dog outside or he's going to be mad at me. Wherever he is. He's around here somewhere. But yeah, if you guys have any, like, questions or thoughts or concerns or anything like that, me and Garen are going to try and do these calls at least once, if not twice a week now. So whatever questions you have, if you don't want to just DM them to me, save them up for the next call, because I would very much like for these calls to basically just be giant Q&A sessions, because it's way more, not necessarily fun, but it's way more informative for basically everyone, in my opinion, at least. And the trick is that I don't stay organized and focused. Yes, I do record them in varying levels of quality. I'm not very good at it. I tried streaming on Twitch for about a week and then couldn't figure it out. Plus, I'm not very good at video games, so it didn't work very well. But yes, the long story short is yes, I do record them and I do put them up on YouTube. They're I forget which channel they're in the server. YouTube. Oh yeah, we have a whole channel for YouTube because like Garen's a full-on YouTuber, so that's where he posts the stuff that he makes, and that's where I put the recordings of these calls. Fair warning though, not all of them are actually watchable. The last call that we did, for some reason I only recorded a quarter of my screen. So the audio was fine, but the video was basically unwatchable. I don't know how I didn't catch that in the middle of like recording it, and I couldn't figure out how to fix it in like post-production or anything like that because I'm far from a video editor, but the audio is there, if nothing else. But yeah. All right, guys. You have a good rest of your weekend. Enjoy. If you have any questions, concerns, anything like that, just DM me. See you guys.